Hello and welcome to Looking at the Markets with David Modell. In this video, I'm going to present you with an intraday trading strategy, a day trading strategy involving the first 15 minutes of the trading day. Please be aware that this strategy does not work 100% of the time. So also, if you do need more help with trading or investing, I do coach people on that. Or if you'd like help putting together a trading or investing plan, or you need help picking out stocks or commodities to use in your watch list and in your trading or investing, you can contact me for the coaching by email at davidmodell@gmail.com. So let's get into this strategy. Again, this is for day trading or intraday trading, so no matter what, you are going to want to close out your position before the end of the trading day because you do not want to expose yourself to overnight gap risks. All right, so this is Apple. This is the 1 minute candlestick chart on TradingView. You can use the 2 or 5 minute candlestick charts if you prefer. It's just that for something as precise as this, because we're going to be measuring the high and the low of the first 15 minutes, I want as much information and as detailed and precise information as possible. And so I am preferring to use the 1 minute candlestick chart. But you can use the 2 or 5 if you prefer to. Just be aware you won't get as much detail in the information presented on the chart. And so TradingView, you'll notice that it has the beginning, this is Apple, 1 minute candlestick chart on TradingView, and it gapped up, okay? And so what I'm going to do is notice that it has the opening at 9:30 a.m. Eastern Time, and then the next measurement here is 15 minutes later at 9:45 Eastern Time, which is very convenient for this method because you're going to wait until the first 15 minutes are finished, and then you're going to measure the highest point, including not just the bodies of the candlesticks, but also the wicks or shadows. Those count as well. So you're going to decide what is the high of the first 15 minutes of the trading day and what is the low, okay, again, including the wicks or shadows. And so you've got the high over here. You can even draw the lines on your chart if you want to. You can draw parallel lines like the high and the low of the first 15 minutes, okay? And then that's how you take your long or short positions. If you get a clear close, okay, a clear break, meaning a candlestick closes above the high of the first 15 minutes, then you can take a long position and hold on. All right. Now, let's say the high of the first 15 minutes was right here. So where did it break above that? Yes, it did. It closed above it a little bit right here. Okay. So I could have taken a long position, and actually it went against me a little bit there. All right. And so what is your stop loss? Your stop loss could be the low that you measured before. Remember, you're going to determine the high, the highest price of the first 15 minutes, and the lowest price. And so if you're going for a long position because it breaks above, a candlestick closes above the high point of the first 15 minutes, then your stop loss could be the low, all right? And so it broke above a little bit here, and so I could have taken a long position. It went against me, but I wouldn't have gotten stopped out because the stop loss would be down here at the low of the first 15 minutes. Went against me, but I stayed in the trade, and it did quite nicely here. Now, what your profit target is up to you. And that's a whole separate video, and I do have a video on taking profits, stop losses and taking profits, and I'll actually put that in the description below this video if you want to click on that and watch that video as well. But I'm not this method does not determine where the take profit is, but it does determine where you can put your stop loss if you want to. All right, now let's say what if it broke? What if a candle closes below the low instead of above the high? All right, well, let's see what that looks like. We have Facebook here from today, the 1 minute candlestick chart, and you can see that it gapped down. Okay, here's 9:30 a.m. Eastern Time. It gapped down, and then I looked at the first 15 minutes until 9:45 a.m. Eastern Time, and so the range, the high of the first 15 minutes was here, the low was here, okay, and so that's where the low is. And so I start, I wait until 15 minutes are done, and then look at that, it broke, a candlestick clearly broke below and closed below the low of the first 15 minutes. And then it did quite well after that, and I could have taken profits depending on where my profit target was. All right, where could the stop loss have been? Well, at the high of the first 15 minutes, but it didn't even come close to that. It went down immediately afterwards because the trend clearly was down. Although if I hadn't taken profits, it did start to retrace, and again, the stop loss would have been here, and the take profit is up to you. That is not determined by this particular method. You would want to determine that separately. And again, no matter what happens, you would want to close your position out before the end of the trading day, so as to avoid overnight up or down gap risk, because this is an intraday or day trading strategy. And so if you take a position and it just drifts sideways and it's almost the end of the trading day, you can close out your position. Okay, and what if it doesn't break above or below the high or the low all day long? Let's say it just drifts sideways, then you won't take any position at all. You will neither go long nor short. That is going to happen sometimes. If you don't feel like waiting all day for that to happen, you can set a time limit. You can say to yourself, okay, I'm going to wait for the first 15 minutes, then I'm going to establish the high and the low of the first 15 minutes, and if nothing happens by lunchtime, let's say, then you're just either going to close your position if you have one, or you're just not going to take a position, because it is true, at least in my experience, not always, but more often than not, I do find boring price action around lunchtime. A lot of traders are just taking lunch off, and then you may want to reconsider your time frame based around that, or you could just wait all day, although it can get boring if it just stays in that range all day. So that's up to you how long you're willing to wait, but definitely close your position by the end of the trading day if you're a true intraday trader. All right, so that is the 15 minutes opening range method. Again, it does not work every time. I strongly recommend, I cannot tell you what to do or what not to do, but I think it's a great idea to virtual trade it, paper trade it first for a while, see if it works for you. And then if you do choose to try this out with real capital, real money, only put in very small positions just to test it out so you don't have any big losses. All right. So my name is David Modell. If you found this video helpful, please give it a thumbs up on YouTube and leave a comment. Have you tried this? Has it worked for you? Do you like this method? Do you have something that's an alternative that you like better? And please subscribe to my channel if you haven't done that already. And hit that notification bell on YouTube so you can receive updates whenever I put out videos like this one. Also, I do offer the coaching, and you can email me for the trading or investing coaching at davidmodell@gmail.com. Also, below this video, I'm going to put some free financial reports that you can download. Check the description below this video for those. Thanks a lot. I really appreciate it. I'll talk to you again soon.